Good afternoon traders, it's Simon here with your weekly review of the dollar pairs. So this week we're at the end of the month pretty much, it's the 28th of July, and I've started with the monthly chart just to recap to see what we think, how the month's gone, and just pretty much just evaluate what we've done so far. So this is a DXY on the monthly chart, and what I really see overall, I've drawn this line in 98.2, 98.25. It's the highest in the daily at the moment anyway, and as you can see there's been quite a few rejections across this level for many years, at least the last 20 odd years. So when we zoom in to the current price action here, we've got a little rising wedge that is there. Obviously price has come down, rejected, moved back up again, but like we've always said before, it hasn't actually moved into territory where we'd say it's bullish yet. And why do we say that? Well, let's look at the weekly chart again here. We've got this same key level 925. You can see actually it's been in this area here so far for the last 4 years or so. We can definitely say that 925 has acted quite decently in the past, here and a little bit around there as well. And obviously when you come to the daily chart, what we can see now is this struggle to get a part of it. So if we do break 925 on the daily perspective, we will obviously overlook what we've done. Could always come back in and out again, but it's something we're going to keep this look at anyway. But let's have a look now at other charts on the higher time frames to see what we can find, and obviously see what trading opportunities that can arise. So here on the euro dollar, for example, all we've had is this move gradually grind down. Now obviously when we broke out this triangle, we chopped around for a bit in this blue zone. We then rallied back up to test the 125 area, which we did. Then we started breaking back down again, which is nice. It's good price action overall, but what I'm looking for now is a little pullback just so we can get some value in somewhere. And obviously now when we look at the euro dollar chart on a weekly perspective, we still have this mishap of nothing actually happening. I mean, some people are going to turn around and say to me, look, you've had your retest here of the weekly 50 EMA, and I suppose essentially we have, but we do have what I'd say is this falling wedge pattern, and obviously we had a breakout, test the week 50 and come back down again. So what am I looking for now realistically? I'm looking for some form of rejection candle this week, really, some inside bar or something on the weekly perspective. You got bullish RSI, and I believe you also have bullish MACD divergence on the weekly chart. So for me personally, what I'm looking for, like I said, is just this rejection candle here. And now we're going to flip to another clean price action chart in a minute on the daily to see what we're looking at. But firstly, let's look at the daily chart, what I've usually used. This downward sloping trend line was drawn on the weekly chart. We've had a couple of break and retests. We are above the daily this daily downward sloping trend line. So where we are now is looking to be a good place to buy. Obviously you've got again RSI sitting at 0 here. It's quite an interesting chart to purchase. Now if you look at this chart, this is the same daily chart on euro dollar, but it's very simplified. And what do I mean by that? So we've been in this downwards trend for quite some time now, for the last year or so, and we've formed this blue box where price has just been stagnant, it hasn't moved anywhere. And what I want to show you realistically now is these yellow box here, buy and sell zone, simple as that. Now you may not have known to sell this one here, you may not have known to buy this one here, but what we can definitely say, this was a sell, that was a sell in this yellow box here. And at the bottom we've got the buyer signs here, 1, 2, and this is what I think the third one is here. So you can definitely take the trade up to at least around this level here. And I hope if you wanted to maybe push it to the top, but definitely this level here, we did do this before. So this is something I'll be looking at buying over the next couple of days. Just purely, it's a very good trade. It's the extreme of everything. If you lose this trade, then expect the euro to head down to 106, and obviously we have a break and retest of this area here. So you get either one or two things can happen. Either we stay within the blue box, no problem at all, or we break out to the downside and come back up again. That's all that's going to happen in the next few weeks or so, and we will determine what happens bit by bit. Now going to gold, I'm going to keep it very simple this week purely because the monthly charts take a lot of the time up. Now this is gold on the monthly perspective, and all I see overall is very, very simple. A huge rally up over 10 years, a little mini double top pattern, a breakdown, and then we've had this area here for the last 6 years of just doing nothing. And the significance of 1350 is heavy. You can see how strong that is on the on the monthly chart, sorry. And you can see we had this great volume of buys to push above this level, but now this candle here, this little doji candle, is even higher volume, which means people are either getting out their positions or they are shorting the market here. So for me personally, I've always said I'd like a test of 1350. I would buy gold at 1350, no problem at all. If gold did break down to this upward sloping trend line, I'd be buying more there as well. It's as simple as that. That's how I'd be placing trades further forward. Obviously it'll take a couple months to happen. So now if we look at the weekly chart of gold, what we have a confirmation of is a lack of buying presence in the market here. So here we have the gold chart on the weekly perspective. As you can see, we had these trees of top patterns here. We're to creep up, another higher test in the bearish candle now. I do sense this will break down to the downside for the short term to come down to 1350. And you can see now on the daily chart here, the upward sloping trend line, which would dictate when we break down. So any close pretty much below this trend line is going to be a shorting opportunity to at least 1350. I'm not too concerned about the daily 50 EMA. As you can see, we've chopped through it so many times. It's only really been tested here, if that makes sense, which was more of the triangle rather than anything else almost. So effectively, I'm only really worried about the 1350 level, not the daily 50 EMA at the moment. It's a good opportunity to take this market short, and obviously then you should get some good buys at 1350. Okay guys, any questions, give us a shout. If not, we'll speak to you soon, and take care.